also want to talk a little bit more about the future of Strike. Like, there's a lot been going on. You've made a couple of announcements since I've seen you last. You're Because to me, Strike was an app to send pounds and dollars to each other, is to send money abroad. But you're also a Bitcoin company. You've added in Bitcoin buying. You came out there pretty bold, pretty hardcore blog post talking about adding in essentially zero fee Bitcoin buying. Talk to me about your strategy there, what you're adding into Strike, what that meant, what your attitude was, because it was a pretty bold and typical Jack Mallers fuck you blog post.
Yeah, I love it. I live for this. Okay, so the announcement is that we're going to let you buy Bitcoin just like you can at Coinbase or Cash App or Kraken, but we're not going to charge anything outside of the cost it takes us to execute, which is most traditionally just the market spread. And so right now, as of talking, that's just around or below 30 basis points, so 0.3%. And if things go according to plan, and just generally speaking, the way the terms go, as we scale our numbers and as more people use it, we onboard people off the wait list, and we make it public, then that drives itself to very close to zero, well below 0.1%. And the reason that that's this shot heard around the world is traditionally buying Bitcoin for a retail investor can be on Coinbase upwards of 4%. So you're talking about, fees that are, and it's a sharp, sharp decline. But the meaning behind it carries a ton more depth. and and I feel like I'm playing chess versus, people that think they're playing bingo. Here's the meaning. In the first quarter, Coinbase had $1.8 billion worth of revenue. 94% of that was charging fees to acquire digital assets. And, sure, they have a million digital assets, but it was almost all Bitcoin, right? And so the 4%, 3.9%, 2.9% they're charging users is their entire business. That's the point I'm trying to make, is without it, they wouldn't have a functional business, okay? Now, to understand markets, open markets, selling open source money, but generally looking at the equities market before Bitcoin existed, it's a race to the bottom. Okay, you cannot have a defensible business that charges 4% because someone's going to come along and charge 3.9%, and the next guy's going to come along and charge 3.8%. And you saw this in the equities market. Now, executing an equity trade is free. That's called Robinhood. Okay. And so those that thought they were building a defensible business by charging 4% to buy equities now they aren't in business. And Robinhood is where everyone goes to buy. And so anyone with the brain cell knows that. Okay. And so you started to see that. You started to see Cash App come in, and they didn't charge 2.9%. They charged 2.5 ish. Venmo came in, charged 2.45 ish. Swan Bitcoin comes in, charges a little less. River Financial comes in, charges a little less. And you're starting to see the free market work itself out. But instead of me coming in and charging a little less, I went straight to zero. And I want to explain this point. And I'm sorry, I know I ran. It's going to be long-winded.
No, do it, man.
But I think it's really important. So why did I go straight to zero? Be like, Jack, people are going to buy on Strike. You should charge 10 basis points. You should charge 50 basis points. It'll still be cheaper than Coinbase. It'll be cheaper than Cash App. You can make some money. No. This is a chess move. This is a point I want to make flagrantly to the Brian Armstrongs of the world. Peter, the biggest companies on the planet are open network companies, okay? What that means, Facebook, Twitter, Google, what do these companies have in common? Their open network is the internet. They operate on an open network that's ultimately inclusive to all, and all it requires is a simple connection, and they have access to their products. That allows these companies to have the biggest target audience in the world, which is the entire planet, which is the global population. So the reason Facebook can be so big is because everyone on the planet, in theory, can have a Facebook account. And now almost everyone does. I think Facebook's user growth is into the billions, right? Same with Twitter, same with Google. If you look at the worth of one individual user on a Facebook, it's not worth the same as a PayPal or a Cash App or a Chase Bank. No, but they have more of them because they're an open network company. Open network companies have a target audience of 8 billion people, and that is an inherent property that makes them unbelievable. That's why there's this giant sweep of internet companies, because you can build one product that can be used by 8 billion people. Never seen before the internet, ever. Okay? Now, the problem that these open network companies have is that they don't have a native business model. Mark Zuckerberg appears in front of Congress 2 times a quarter. Everyone hates the guy. Facebook's brand is terrible. Twitter's brand is terrible. Google's brand is terrible. Why? Because the only business model they've been able to manufacture comes at the cost of the relationship they have with their user. Their user is the product. They have to sell private data. They have to go against their privacy policy. They have to constantly apologize. They have a terrible brand, and it's limited the company's upside. It's limited their ability to grow. And what you're now seeing with Twitter Spaces and Twitter Tip Jar or Facebook getting into cryptocurrency or now Google is they're trying to fix that. They're trying to reestablish the brand and the long-term viability of their business and unwind the fact that their very user is who they abuse to make money. Okay. Now, if you take a Cash App, for example, they have the opposite problem. They have a great brand, so good that rappers rap about them and wear their fucking clothes. The reason they're not bigger than Facebook is because their target audience is a very select group in the US. And in order to reach 8 billion people, it's infeasible to scale the Square monetary network that big. Okay. So I say all that to say, here's a high level view of how these bigger companies operate. And if I'm like this, macro trading analyst, I'm giving everyone free advice, right? So this is how to think about it. Now, let's look at Strike. This is why I think Strike will be one of the biggest companies on planet Earth. And it's not because I'm super cool or our CTO is super smart, although both of those are true. I'm like the coolest motherfucker ever. Everyone knows that. But the reason is because we are an open network company too. What's our open network? Bitcoin and Lightning. And that I could build a product that could be used by all 8 billion people. Yeah, it may take me 12 to 24 months. That's not a lot of time, right? Strike's already growing incredibly fast. And so I am an open network company, similar to a Facebook, similar to a Google, similar to a Twitter, where I can build a product accessible by 8 billion people. However, I am a financial services firm. I know how I'm going to make money. I don't have to sell user data. I don't ever plan on appearing before Congress. I don't ever plan on surfing with an American flag on the 4th of July like Zuckerberg and becoming the most hated man on the planet, right? I actually think Strike will become one of the more powerful consumer brands on the planet because we have the business acumen and profile of a financial services firm like a Cash App, and we could build a brand that's tremendously powerful, in line and incentivized with our users. But we are an open network business like an internet company, and we have access to all 8 billion people. So all that to say, Bitcoin enables companies to be that disruptive and be that big. The biggest companies in the world in 5 to 10 years will be Bitcoin companies because they'll be open network, internet-like companies, but financial services firms who make a ton of money because the value of a single user is known and how to make money on them is known and it's incentivized. The biggest retailer in the world is using Strike's API to process payments, and we charge them 10 basis points compared to Visa charging them 300. We're making money. They're saving money. Our users are getting more rewards and having a better experience. Everyone wins. Everyone wins. Now, all this long rant to say, Brian Armstrong whiffed. He fucked this up big time. He just missed it. He missed this opportunity. And it shows a very fundamental lack of understanding of why Bitcoin's important, how Bitcoin was going to scale, how the Lightning Network works, why it's the best monetary network on the planet, why it's going to usher in this disruption, and how the ultimate scalable business model of a financial Bitcoin company is charging the biggest retailer in the world 10 basis points versus Visa's 300. And that you cannot charge and live on 4% for retail to buy Bitcoin because it's a race to the bottom and it's going to go to zero anyway. And buying Bitcoin on an app is a feature. It's not a business. It's a competitive market. It's a race to the bottom. And you saw that in the equities market. And so what Brian Armstrong somehow did, to his own fault, and that's why I'm calling him out, is he tried to replicate the equities market. He found his business advantage as I'm a first mover. I was here first. I have the most licenses. And sure, Jack, you can sell Bitcoin, but I sell Algorand coin and Pink coin and Left Sock coin and barbecue chicken coin. And so you can never compete with me because I've built this regulatory moat and this first mover advantage. And what he's done is he's built a proxy long positions on altcoins, which make no sense, right? And he's replicated the equities market. And he doesn't understand everything that I'm saying. And what I'm doing, obviously I'm building a great experience. Obviously, I think the best financial experience, you should be able to acquire Bitcoin in many ways for as cheap as possible. But more so what I'm doing by expediting this race to the bottom to zero. Maybe Brian Armstrong thought he had 3 to 5 years to figure this out. Well, guess what, dude? You got 3 to 5 weeks and you're fucked. And it's like the Big Short. I'm calling you out. So now I'm building a leverage long position on Bitcoin being the true innovation in cryptocurrency, that digital scarcity does have value, and that altcoins are implied unintended inflation to the asset class. And that if you have 1 million monetary networks that aren't interoperable with each other, all you've done is recreate an inefficient monetary network system that we already have today, and it doesn't develop any innovation. I'm making a bet that Bitcoin and Lightning are the innovation, and they are going to last. Altcoins are going to die, and that my business model of using an efficient, better monetary network and using buying Bitcoin for free as an acquisition is going to margin call you. And I'm pawn to E4, your move, because I think you fucked up. I think you recreated an equities brokerage and you didn't learn anything from the past, and you didn't take the time to understand Bitcoin. And the same brand that Mark Zuckerberg has that's so tarnished, now you have. Bitcoin core developers hate you. Bitcoiners hate you. You have to act against the best interest of those that very built this industry by listing shit coins and going against everything that we always say, and all the forks that we're going to break this industry, you have to support, because the fundamental flaw in which you built your business on, and you fucked up. And it's been long enough, and I'm sick of it. And I finally got old enough and in my mid to late 20s to build my own company and call your bluff.